So what if Nifty give a closing below this level? You don't need to go short immediately. All right, why? Because you have to see some price action or some pattern. Like if this is something a pattern, if we get a opening of a gap down and a big red candle, so we can say that it is a candlestick pattern of a island reversal pattern. Okay. And if we see some big bearish candle like this, so we can say it is the bearish engulfing candle. So we need some candlestick pattern and a follow through. So you have to wait for Monday, Tuesday, and Wednesday to take a decision here that is this rally has been done or not, because this rally can extend up to this zone, which is 16,700 or 800 area. This can extend these level. It might possible Nifty will drop below slightly here, and then it start going upward to test this previous resistance of 16,800 and 17,000 area. Now from here the momentum has been picked up for to reach this area here. This is the level, which is 15,500. Means this is your very strong support area. Okay, above this area, which is the likely support area, this zone, which is 15,800. Okay, because look at this, after going to break or entering into the gap, we just closed here near 15,800 and then picked up. Okay, so these are the two important support, which is first is 15,800. Means whenever you see Nifty coming to 15,800, you will attempt a buy. Okay, you will attempt a buy position for a higher target. Okay, and what should be your stop loss in this region? Your stop loss should be this 15,530. Yes, you have to accept that this is a big stop loss. People will say this is a 300 point stop loss. Yes, this is the 300 point stop loss because Nifty has the these kind of volatility nowadays. This is nothing for Nifty to breach in a. It can breach this in a 1 or 2 day. That is very common. If you say that you need a stop loss of 50 points or 100 points, it's nothing. So you have to keep this kind of approach. And the risk management should is on your hand, because if you are going to take a futures lot, you have a risk capacity. You should be having a risk capacity of 310 points. All right. And if you are not having that much of risk capacity, don't buy and just don't go for that trade. Or you rather go for an option trade, buying an option on a lower premium cost. Okay. If you are buying an option, you see a lower premium to give a lower premium. Okay. Now, what is the outlook? That whenever there is a corrective move on the downside, you should attempt a buy in this zone, 15,900 and this area for a higher target, keeping a stop loss of this. First stop loss should be the 15,775, and your first buying attempt should be this area, which is 15,960 and 15,900 area. Okay, and then you will look for the upside. If this breaks, then you should see whether the Nifty is going correctively up, or whether Nifty if it is broken on the closing basis, you have to see there is a bounce or a continuation pattern. If there is a bounce, you will go short on the previous resistance for this this area, for this support area. Okay, if you are a buyer, you will have to wait for the lower prices. So if Nifty will come to the lower prices, you buy with this stop loss and you go for the upside in 16,400 and 16,600 targets. Okay, and whenever you reach to these extreme points, just step aside. If you are a safe player, if you are aggressive, just hold the positions and to break this level or to book the maximum targets. But you should decide which type of a player you are. So what should the trading strategy or what should be the outlook while trading this Bank Nifty? So my outlook is that we will going to break this area in the coming days, which is 36,000. So any corrective move any corrective move should be taken as a buying opportunity to break this high, to reach this zone, which is 36,500. Things will take times. It will not be in one day or 2 day. It might be possible that bank nifty will go in a choppy correction for this move, and then will pick up upside move. Okay, so this will be your this will show your strategy, and also what should be the support area. The support area should be this 33,600. So as long as bank nifty is trading above this 33,600, you should look for a buying opportunity. Well, how to go along? Just wait for a retracement. If it is coming, if it is coming in your zone, just go for buy. And in the bank nifty, there is no clarity about that on the higher degree time frame what structure is going to form. But on the lower degree time frame, we have a strong support area which is 33,600, and as long as bank nifty is trading above this, bank nifty is going to keep moving up. So you have to wait for the price action to come close near to this your area, and just go long on the bank nifty to break this high, which is 36,100 region in the coming days. Okay, so this is all about nifty and bank nifty. So let us talk about some other stock opportunities. What is happening in the stocks? So let us see. So first of all, I will see this stock, which is L&T. L&T, what is happening? This is forming a leading diagonal. I am saying this as a leading diagonal because on the higher degree time frame, I have finished 5 waves. Look at this. This is wave 1, this is wave 2, this is wave 3, this is wave 4, and this is something messy and choppy, wave 5. So I'm saying that this is something a leading diagonal, or starting of something larger degree correction. So you can take this as a B, C as a diagonal, ending diagonal also. So this is, but on the degree wise, I'm taking hold of this as a leading diagonals, because this can be a starting of the larger degree correction for this stock. So we are not going to discuss about the long-term outlook on this stock. We are just interested in the short term for the coming week. So what happens in the diagonal? Whenever there is a formation of a diagonal and the confirmation comes above the wave 4, look at this. This is wave 1, wave 2, wave 3, wave 4, and wave 5. So the confirmation has been came. Although I have given this buying recommendation earlier, anticipated price action. Look at here. I have given the idea on 5th of July that it can be bought here for minimum target of this zone. Now we have seen this post-market price action that is in line with this diagonal structure. On the psychological point of view, if we see the post-market price action should be swift and sharp, means there should be a swift and sharp reversal. It will not give you a chance to buy this stock. Okay, there is a much more possibility to go higher, because this is the wave 4 only, and the minimum target of this pattern is for this area, which is wave 2. Okay, wave 2 area. And if we see with the help of Fibonacci retracement, so look at this. This is only about 38% retracement. Okay, so minimum it should go to the 61.8% retracement, which is also coming about to the area of wave 2. Means 1845 should be the next target of this stock. And what should be the stop loss? Stop loss should be this 1600. Unless and until you will not see closing below the 1600, you should be long on this stock, and the stock will go to this area in a very sharp manner, because this is the diagonal structure, and the property of the diagonal is says that there should be a swift and sharp reversal to the previous second of that wave formation. There is similar kind of structure formation in the another stock, which is Titan. Look at this. Although this was on my radar, but because of some other factors, I was not comfortable with that, that this is kind of a diagonal or not. But the price action in the previous few days is in line with the this post-market price action of this pattern. So whenever there is a kind of this kind of diagonal formation, there is a swift and sharp reversal. Okay. So you this candlestick is like a doji. This is another something a very small range candlestick. So you should wait for a retracement or a pullback. So buy on pullback. So what should be your stop loss? Your stop loss should be the closing basis below the 1990s or 1900. Okay, and any dip to this level, which is 2085, which is the higher part of this area, and if it is going to fill the gap, it is well and good. You just buy in this area also, but it is less likely that it is going to fill this gap. It may come into the gap, but it is less likely because this is post market price action after a diagonal, which should be a violent and which should be a sharp on the upside, because this is the downside diagonal. So there is a less possibility of filling this gap. So any pullback should be bought, and you can keep your stop loss below 2000 area also, means the lower part of the gap. But if you are making a buy position in this gap area, you should keep this stop loss, which is 1990 level, and look for the target of this previous second. And again, if you project this Fibonacci retracement from this level, so you will see some 50% retracement area here and 61.8% just above this level. But I'm saying that we should go for this area, which is 2285 or 2300, just for this trade. So again, if we measure the percentage move, if we got entry here only, which is 2085, and we are looking for this target, which is 2295, avoid the round number, that is 2300. So we are looking for 2290, 2285. We are getting around 10% move on this stock again. Okay, if you go long on the CMP, what is your risk? Risk is 7%, which is not looking good. So you should wait for a dip. If you got the dip, so your risk will be reduced to 4.5%. Okay, and your reward is 10%, which is on the risk reward ratio. It is good trade. Okay, but if what happens if the stock is not going to give a pullback and start going upward from this area, just leave it. Simple, just leave it. You have another stock, which is L&T. It is also forming something similar kind of a structure. Okay, and you are having some more percentage gain. You are having opportunity to get a more percentage gain on this also. You are having a 10% here, and if you want to say that what should the stop loss, again 4.5. What you are looking for a pullback to reduce your retracement, it is giving you just on a very slighter retracement area. So you can go long on this stock on CMP also, keeping a stop loss of these, and your target should be this. Okay, now let's talk about another stock, which is Hindalco. All the metal stocks has turned out. What is a 5 structure? It is an impulsive move. 1, 2, 3, 4 as a triangular structure, and this is 5th wave. So here only before some few weeks ago, I told that there should be a short-term bottom on this stock, because this was forming. This is a formation of triangular structure, and after a triangular structure, the thrust out of the triangle is the last wave. Means this should be the 5th wave. And after that, there should be a reversal. So this is something like you have seen that this is the previous high in the daily time frame, or you can say that this can be a previous high. So in both the cases, it has just penetrated both the level here also and here also. So you have to go long either on the current area or on a pullback, and keeping a stop loss of these area, which is look at this area. The buying has came from this area. Okay, this was the doji, and the market has successfully sustained above this doji. So this is your very important level, which is 327 or 328 roughly. So this is your very important level, and although market has already went above, so you should be careful about the retracement. Whenever there is a retracement, just go long, and keeping your stop loss here, and look for the target area of this 400 and 420, because this is the previous fourth of the larger degree wave A. So this is going to be, it might be possible it can go like this. It might possible that it is going like this and to about this area. So we are interested on the short term opportunity. Okay, we are interested in this only, this area. We are not looking for this. We are just interested for this area. So any pullback should be bought with the stop loss of this, and your target should be the 400 and 420 areas. That's it. So these are the three stocks which we have discussed, and Nifty and Bank Nifty in this session. We are targeting this level, which is 36,100. Okay. So whenever you see a drop to this level, which is 34,000, which is very very far from this area. Okay. So you should take the Fibonacci retracement of this previous swing, and whenever Nifty came to this 38% retracement, means the area of 34,500, you should buy a strike price of 35,500 or 35,800, which is just below your resistance. Okay, so we are expecting this kind of price action.